Hello and welcome back to the Coinrotator channel. I'm the apprentice Martin and I'm here with the man behind Coinrotator, Pixio.
Hey everybody, how's it going?
What's up? How are you doing today?
Pretty good, pretty good. It's kind of weird weather up here, and we're
Oh,
enjoying
oh,
ourselves.
we're saying our location. That's fine.
Oh, no, we shouldn't say that actually. Never mind.
Okay,
What
it's
the
fine.
fuck
It's
am I
fine.
doing?
It's fine. I'll cut it out. Okay, yeah. So today's theme, we're gonna go over some basic trading setups, and
Yeah,
yeah,
I
you've
think there's a lot of information that people
yeah.
have, and we'd like to sort of clarify some things, try to help people from switching around from setup to setup, try to have something concrete in their mind that's proven to work in multiple types of markets. And yeah, why not share some alpha
Yeah, and
people
I'm always happy to
can trade
learn.
with?
So you've talked,
Yeah.
you've shared me a message, and I screen capped it because I had a lot
Okay.
of questions, and I thought it's gonna be a good idea to just
Sure.
do it for a video
Absolutely.
and like ask, and you can walk me through as a complete idiot. Okay, that's
Well,
not.
you're far from an idiot, but yeah,
Thank you,
you
thank
you
you.
haven't been trading too long, but you've proven that you're definitely interested, and I think you got the right stuff. So yeah, we're looking at the mechanical setup, as I like to call them. Mechanical doesn't mean robotic; it just means like you have a set of repeatable rules or guideline that you're checking for these confluence of factors every time you look at trade opportunities,
Mm,
and they don't necessarily have to all align every time, but the more factors that align, the more likely the trade will work out. Or even if it doesn't work out that one time, you know that in the future it will work out and it will continue to work out in a
yeah,
repeatable fashion. And that's what makes it mechanical.
yeah. It's
So
about
this is
the consistency.
yeah, the idea is to try to be consistent with your approach to trading rather than highly emotional.
Mm,
Although I have to say, being emotional is not a problem in itself in trading. I'm highly volatile, highly emotional person, and I don't think it makes me worse of a trader. What makes me good or bad is the consistency of my actions and my approach
yeah,
to each
having good
trade.
fundamentals.
Yeah, something like in sports, I guess, or
Hmm.
in music or art. So yeah, this trade setup I'm calling slow trading as opposed to something that's a bit more lower time frame. And in this case, we're looking for monthly closes on
Hmm.
candles. Um, so normally people are trading in smaller time frames, and there's nothing wrong with that. But I think confluence of time frames has proven itself pretty valuable. So in this case, we're starting with the monthly candle close. Once we have a bullish monthly close, we'll look for confluence with the screener on Coinrotator for a weekly bullish close and then a daily bullish close. And once we see that, then we can scale down to the the chart. And on the chart, we can see. Maybe you want to show the chart, yeah. On the chart, we can see that when we have patterns that take a long time to form, the candles become more and more compact. They don't necessarily start going up, but there's a confluence of the high and the low of the candle, and it gets tighter and tighter. We call this a tightening spread. And eventually this reverses because there's simply a lack of sellers, and this lack of sellers can push prices back up. If you have certain catalysts, maybe some investment rounds or maybe some new tech coming out on a chain, the coin will start to move up. And this sort of aligned really, really well with the seasonality in September for
Hmm.
TIA. In addition to this, there was one sentiment factor that was fantastic, which was there was absolute consensus, let's say 99% consensus, that TIA was going back to zero. Even though it's a new chain, it it's got tons of investment. There's a really good team. there's all these really
There's a
positive
lot of haters,
factors. I have
no?
nothing. Yeah, that has nothing to do with price, but there's such like this misalignment with supply of tokens and fair value. And when you have this, you often find that people get blindly bearish,
Mm-hmm.
cynically bearish. They don't believe that a coin can ever go back up again, and that is currently the case with TIA. And I found it to be just a really irresistible trade. It was actually one of my best performing trades last year as well, and I wouldn't be surprised if it turns out to be a really good trade going into the end of the year. So basically, what we're looking at in this chart is we have, as we were saying, reduced supply as the price is dropping. It got
Mm-hmm.
lower and lower, and then you start to see that there's simply no more sellers left. So we try to enter when we start to see this sort of environment, and it lines up pretty well. So yeah, that's what makes it a slow trade. Basically, is that it's Confluence, and Confluence takes time, and taking time in a trade is something that's a mechanical process, and it takes patience. It takes experience, and it takes you being able to sit on your hands for long enough to wait for the right opportunity. And this is really, really tough. This is a skill that's very hard to teach. Something you only learn over time.
Yeah.
So,
Okay, so let's dial back. So
yeah.
you looked at Tia, and you're looking first at the monthly candles, right? I don't think I've ever
Yeah,
looked at a monthly candle. That's like too.
right.
That's
Yeah,
like
because
it's
it's
like
too
too
slow.
slow. Yeah, it's
Yeah,
too slow.
yeah,
But
it's too slow.
you say you look for the bullish close. What do you mean
Mhm.
exactly by bullish close?
So a
Just
bullish
green.
close is when you have four basic numbers on the candle. You have the open, you have the high, the low, and the close.
Yeah.
So my definition of a bullish close is simply a candle that appears to be closing higher than it opened.
Yeah.
Yeah.
So basically
So as you
just
see,
yeah,
this,
just agree.
yeah,
Yeah. Yeah.
it's fairly bullish close.
Mm-hmm.
Yeah. So it's higher than the high of the previous candle. That's really good, but it's not necessary to be higher than the previous high of the candle. It should simply close green and have some sort of wick on the bottom to
Mm-hmm.
to sort of test that there was sellers and buyers stepped in to take the candle higher. So we also had a bullish close a few months ago. It looks like that was in May. Yeah, that
Yeah.
was
May.
also a bullish close.
Mm-hmm.
But I'm not saying that we trade off the monthly candle. I'm saying we're just using this as a filter to
Yeah. You
show that.
start. Yeah. We start with that.
But that's not the trade itself. That's just simply
Just one criteria.
one confluence factor.
Yeah.
Yes,
So after
exactly.
the monthly one, you look for a confluence with the 7 day and 1 day trend on Coinrotator.
Yeah, exactly. I'm not looking at the chart directly per se.
Mm-hmm.
That's kind of the last mile, I guess, for my trades is I'm trying to time my entry based on price action, and the indicator helps me with this. So once we decided to take a trade, now we have to manage the trade.
Mm-hmm.
So now we have a new challenge of patience. So we have patience to wait for the setup. Now we have patience to wait for our exit, which is either in profit or at a loss. So obviously, we would have to have a fairly wide stop if we're trading on a slower setup. So we can't necessarily expect it to move the day we buy it. We have to give it a week or two to play out, but we don't want to see it closing on a weekly basis below our entry. That's a warning sign that it's not a good trade, and we should probably be looking to exit either break even or at as small a loss as possible.
Mm-hmm.
But if I'm trading on a daily time frame and I'm using a monthly as my confluence, I would definitely give a trade at least a week or two. I would not stop out of a trade after 2 or 3 days.
Okay.
I think that's just too fast.
And
Okay, so yeah, sorry,
yeah,
go ahead.
for a slow moving trade, let's say you're in profit now. So what is the best time to exit? How do you time like when to take profits? Because that's like very
That's a
difficult for me.
yeah, that's a really good question. So as you can see around it looks like the 16th of September, you had a really strong daily pullback.
Mm-hmm.
And if I wanted to be really conservative and I was holding a really large position and I wasn't comfortable with giving back my gains, I would consider scaling out after that day. Not on the close of that day, but after that day. But as you can see, the very next day, market took off. This is exactly the situation that most people find themselves on September 16th. You can see. So as you can see, like that was sort of a bearish closing. Oh no, like price is going down. But actually, that's kind of a test of support.
Mm-hmm.
So we have our first test of support. If the next day closes lower, okay, now you got to take some of your profits off the table. As you see, it took off after that, and then it was a fairly easy ride. And then
Mm-hmm.
you had the exact same scenario happen again at a higher price
Yeah.
on the 22nd. Then it went higher. So now we're looking at environment where the candle closes are starting to look bearish. These are bearish candles. So you had this huge spike into resistance,
Mm-hmm.
and there were not enough buyers to maintain that momentum. So now it's starting to consolidate, but you're already up quite a bit from this trade.
Yeah. And by
So
resistance, you mean the last red candle, like like you mean this one
well,
going
I
into.
mean the accumulation of candles, not necessarily one candle created the resistance. We're looking at a period of time here. We're trying to trade in a slower manner, giving the market a chance to prove itself. So actually, when I'm looking at this chart, I see 6.5 as the resistance level from a series of candles, because actually on the 19th, there was a candle that traded at 6.5 on September 19th.
Yeah, yeah.
Yeah. And then you had another one on the 23rd that closed above, but then you have now one day close below, and now you have a second day. So if we can't get a close above 6.5 on this candle,
Mm-hmm. So
I
that's where
would
you would
say
exit.
it's time to take off half.
Mm-hmm.
So that's one way you can take profits, but that's a very active way which requires a lot of discretionary thinking.
Mm-hmm.
Another way is simply to set take half at the upper band of the Coinrotator indicator.
Yeah.
So if you can show that. So when price would touch, what is that, about $8, which is insane, but I don't think it's that far off. TIA is an extremely volatile coin, has very low supply currently
Mm-hmm.
on the market, which is one of the reasons people are so bearish on it. Is there's a massive unlock in October. However, the VCs have already stated that they're interested in accumulating more at higher prices. Nobody believes them, but it's a fact that they're saying this. So we kind of have to wait for the price action um, to see, because we could get a very good reward of $8 instead of 6.5.
Mm.
So yeah,
So you're saying that if the price reaches the band, you would take half, not the whole thing.
yeah, exactly. Because there are occasions, very rare, maybe like 15% of the time, but 15% of the time is actually a pretty good return for free money,
Mm-hmm.
where a trade can last for a year. For example,
Yes.
my initial buy-in on Celestia was around $2-3. So I
Damn.
mean, it never really went all the way back. I think you also had some examples of trades
Yeah,
where
yeah.
this happened as
I did
well.
take your advice on
Yeah.
that one.
Wow, look at that. So this is a similar type of play where you took half, probably
Yeah,
around
more than half. Yeah,
yeah.
and it did
Well,
pay
I
off.
mean, initially though, you probably took half after 100% gain, I guess,
Yeah,
or
yeah.
maybe a little less than that, and then you're just holding as long as you can, and it works out really well sometimes. And the times it works out, it makes up for the times where it doesn't by a considerable factor. So it's been really tough to trade with this take half strategy the
Yeah.
last 3-4 months, but earlier in the year it paid extremely well. So you just have to sort of have persistence and believe in some sort of mechanical process to help you make outsized gains.
Yeah, I do think it's more consistent to just because I used to just just sell everything, or like
Right,
just get
right,
out of the trade
exactly.
completely. But
Yeah,
Yeah, yeah, just like leaving some in there, like a little seed.
Yeah.
Like
I think
yeah.
I think it's not a bad strategy at first. The problem is if you really want to make huge money in this game, you really need to let your winners run. And if
Mm,
you're always taking profits on good trades, that just doesn't happen. Mathematically,
yeah,
you're
yeah,
going to
you're right,
start
you're right.
losing more than you make on each trade. And when this happens, you just cannot overcome your losses.
Yeah. And also when
So
it happens, when I like get out too early, then I hate myself. I'm like, oh my God.
yeah, exactly. And
Yeah.
so when you take half, yes, you're not going to make as much on your winning trades, but occasionally some of those trades turn into 3 to 5x trades. They're not like,
Mm,
you make an extra 20% here and there. You're making several 100% on
mm.
trades. So then it becomes a free money scenario, which is kind of what I trade for. Like the small gains or the small losses, I don't really get so bothered by this. I know it's extremely hard
Yeah, you've
to
been
deal
long in
with
the
this.
game.
I have been doing this a while, yeah. Um, so it's just something you have to train your mind for, and the only way to get good at it is to take a lot of trades. There's no way around it really.
Yeah, I'm just like really scared of, losing money. So
Yeah,
most of the time I do just exit my position like entirely.
yeah.
But
Well, I mean, if you're able to avoid losses, then it's the best strategy.
mm,
But most people can't avoid losses, so it's better to be in the market as long as you can when price is going in your favor. So it means you have to keep zooming out and zooming out and zooming out
yeah, that's for
daily, weekly, monthly. So anyways, yeah. Well, looks like it was a good trade for both of us though.
yeah, yeah.
Worked
This
out.
is your TIA trade that you shared with me. And
Yeah.
yeah, that's not as big as my INJ, but we'll see.
Yeah, yeah.
We'll see in
Well,
a year, so it's fair.
I can't compare it to some of your huge home runs.
Okay. So you also shared another trading setup with me, which involved the
Yeah,
funding rate, which is a new feature on Coinrotator.
yeah. It's in the advanced data points. I mean, it's fairly standard for futures traders, but maybe if you haven't been in the game too long, you might not know what the benefit of this data
Yeah,
is.
I have no
But
idea.
but basically, negative funding is the spread between the spot and the futures price,
Mm.
and it's
Like,
a
why is the
way
negative
to.
number green instead of red?
I think it's a cultural thing. We'll have to talk to the developers about this,
Oh, okay,
but
okay.
it kind of makes sense to me. Maybe to people from other parts of the world, it makes no sense. But basically, I'm using this as a number as an incentive to long a position,
Mm.
uh, where I'm getting paid when that number is negative. The exchange is actually paying me this number over a period of hours. So it's let's say an incentive for people to long the coin when it's negative. Now,
Oh.
it's an interpretation of what this what the value of this number is in terms of how it will influence my trade. For example, GCR, the now infamous GCR, who shorted everyone's Ethereum. I'm just joking, but he he actually has calculated that by him shorting coins with negative funding, the amount he had to pay out was very small compared to his gains.
Mm.
However, I'm approaching this from a slightly different perspective, which is when coins are starting to trend up and the funding is negative, I'm actually trading with the momentum. But the reason the funding is negative is because there's more people shorting the coin than longing it. And because of that, I'm actually getting
Oh.
paid a small fee just for holding it for several. I guess this calculation is hourly, but every 4 to 8 hours, depending on the exchange, they're going to pay this amount to me. So if you hold it for a few weeks, it can turn out to a 5 to 10, even 50% profit
Oh. But is
of
is it
the
is
amount
the
of my profit.
is the funding rate unique to each exchange, or how is the
Yeah,
number?
every exchange has
Oh,
a
okay.
unique funding rate. However, we have the aggregated funding rate here.
Mm-hmm.
So
Okay, okay, I
depending
see.
on your exchange, it might be slightly higher or lower. But generally, it's fairly aligned. Um, But this is just a good way to filter if you're bullish on a coin and then the funding's negative. It's it's a really good opportunity
Mm-hmm.
to buy the futures on it because you're going to earn
Oh, I see.
a small yield on it for the time that you're holding the position. So, but normally when a coin is bullish, this number will be positive, so you'll have to pay out that rate.
Oh, I didn't even know that
Yeah,
I'm paying that, like, or getting
yeah,
something
yeah.
for these
You're
trades. I had
paying
no idea.
exactly. Yeah, you're paying every day. I mean, again, as GCR says, like if you're holding long enough and you're holding with the trend,
Mm-hmm.
um, your profit should compensate for this payment. But in the short term, it's just another incentive to hold the future. So in
Yeah, it's
fact,
like dividends.
another thing that I will pay attention to is if I'm in a position and it's been like, well, you see this scallop trade on Sui, which is it's a DeFi protocol on
Mm.
Sui. Um, it's been 13 days. It's getting a bit stale, but funding is still negative. So for me, that's a really good sign that there's still some room left for this coin. But if I start to see funding going positive after 13 days, I will probably start taking profits on that trade.
Ah, because that means there's
Yeah,
more people buying it than selling.
exactly.
I
It's getting
see. I
crowded.
see.
Yeah,
Ah.
it can be really useful.
Mm.
But of course, like everything, it's not perfect. Nothing's perfect. The screener's not perfect. The indicator's not perfect. Trading on funding rates is not perfect. There's an interpretation of every data point in 50 different ways, and it's possible for many people to be right and disagree. And I think younger traders they really struggle with that lack of certainty. It's very frustrating, but that's how markets work. There is no certainty. It just doesn't exist in
Yeah.
trading.
Yeah,
Yeah.
it's like I just always view it as like, there's like a checklist of things, and like
Right.
if a lot of things align, the likelihood increases, but like it still doesn't mean it's a
Exactly.
sure thing.
Exactly.
Even if all the check,
Exactly.
yeah, if all the
Yep.
boxes check, it doesn't mean
Yep.
it's 100
It
percent.
doesn't mean it's
Yeah,
that's
yeah,
right. It does not mean that the trade will work out. It doesn't mean that at all. But it means over time, if you have a set of trades, uh, you can expect a positive outcome over enough trades.
mm,
So for that reason, you should have confidence to take those setups whenever you can.
yeah. That's cool. And seeing like new features like this added to Coinrotator. But
Yeah.
the this is only available for the key pass holders, right?
Yeah, yeah. I mean, you can find this data online, but within a screener, yeah, you'll need to have the key pass for Coinrotator,
Mm-hmm.
which is still free to mint on Zora. We can share the link in the description. But yeah, it's basically still in beta, but we're getting valuable feedback. Uh, Developing the screener to make it an invaluable tool for any kind of trader. Um, more active you are, the more useful it can be. But yeah, basically with the idea of trying to catch anomalies in the market when things are mispriced or really out of line, something's up too much or down too much. Uh, the screener is trying to flesh out those opportunities.
Mm. Okay, let's look into some recent events.
Yeah,
There's been an
so
emergence of DeFi coins that you've mentioned to me.
yeah, so this kind of lines up well with we had a really nasty dip in the market early August. This aligned with the Bank of Japan raising rates, while at the same time the expectation was that the Federal Reserve in the U.S. was going to lower rates. So this basically reduce the carry trade opportunity for a lot of people who are borrowing yen at 0 to negative rates and then depositing it risk free into other markets. Um, Basically, the yen rising because of higher rates and the dollar dropping created a very short term destabilizing effect on a
Mm,
lot of risk assets, including crypto. And so the general market was way down, but coins that were specifically, well, most of them are governance tokens because of the SEC, but that's an entirely different matter. Uh, these DeFi projects got a lot of flow. Some of these included Aave, which most people know. They probably know Aave because of Trump having some sort of alliance with some really weird DeFi project that uses the back end of Aave.
Mm-hmm.
But also, it now became, or presently, it's now much more attractive to be in stable coins, depositing stable coins, and earning a passive yield, which is virtually risk free as long as you have good wallet security. Um, so basically, the rate for holding stable coins and depositing them in a DeFi protocol like Aave or some newer protocols like Cloud on Solana and Camino basically means that you can earn more money in crypto for the
I
first
see.
time in a long time than you could in depositing dollars in the bank that you borrowed from the Bank of Japan. Just for
Uh,
example, it's much more complicated than that. But that's the general sentiment. That's the general thinking behind the success of these DeFi coins going up. And
mm,
they all kind of went up together. It's not just Cloud or Camino or Aave, but these are ones that did pretty well for us.
yeah.
This is actually a trade of apprentice number two,
Yeah, I was wondering how you cooked that out.
Ken Carson. Yeah, Ken Carson, famous rapper. I I mean, I don't
Also,
think it's
also an
actually Ken
apprentice.
Carson, but yeah, apprentice number two. He's
Yes,
into the
you've been
DeFi
cheating
plays.
on me and like taking
Yeah.
apprenticeship from
I have I have
strangers.
I have too many ideas. I have to share them with
Yes,
more than one person.
and no hard feelings. So, well, I was always under the impression that fiat currencies losing their value, for example, like the Japanese yen, that's like good for
Yeah.
crypto, or like it's going to make crypto more
Well,
valuable since.
this is another thing which makes trading incredibly difficult is the conventional narrative about why something is good or bad is not static. It doesn't
Mm,
stay the same forever. So yeah, in the past, or even very recently, even early summer, uh, the Japanese yen going down was considered a bullish signal for risk assets because
yeah.
it's basically people selling yen to buy something else, right?
Mm-hmm.
But that can easily change because there are stronger, more prevailing narratives that take its place. So it's theoretically possible for the yen to be strong and crypto to also go up.
Mm-hmm.
So it's kind of what's happening now is that you have a relatively stronger yen than you did a few months ago, but crypto is now going up. So so basically you can't have a one-to-one relationship between two gigantic assets like a currency and an entire crypto market. It just doesn't really work out very well. We also had a lot of weakness in the dollar early August, right? Because the yen was strengthening.
Mm-hmm.
Normally, the US dollar being weak is the most bullish factor
Yeah,
for
yeah.
crypto, but it wasn't the case at all for several weeks, even
Yeah, I was very
months.
surprised. I thought
Yeah,
it's gonna go the other way.
right. But if you're looking at the long enough timeline, then yes, a weaker dollar means that people have to earn back the loss of value of the dollar somehow, and so they're going to seek out riskier investments, which is kind of the point of this one of this here is that as people have um, filled up the let's call them the rice steps, or maybe you can set this up better than me, but I just have this idea in my head that liquidity is literally like filling up the watering the rice fields in northern Vietnam.
Oh, honestly, I have no idea how the watering works of rice fields.
I don't either. I just remember seeing this many times and thinking, wow, this is
Mm.
kind of how global liquidity works.
Oh, I
So
see.
so basically the idea here is I just imagine like the top steps of the rice plain of these rice fields. Once they fill up, then they trickle down
Yeah.
lower and lower
Mm.
into the plain. And I imagine like each each level is like a tranche. So like when the top one fills up, those are like the most popular coins in crypto or in risk assets, risk stocks, risky bonds, whatever. But once they get filled up, it's now like overvalued, so to speak. So then people have to go further out on the risk
Ah,
curve
okay, okay, I understand now.
to find
Yeah,
something
they
of
go for other
value. So like,
coins.
yeah, so like market cap is lower, so then they're more comfortable to buy it. And as you see, there are many steps, so this can go on
Mm-hmm.
for quite a while. And I suspect that we will see this very phenomena occur in risk assets. So like, yeah, now you probably shouldn't veer too far away from the most popular risk assets in crypto because they're still not really overvalued in a historical sense. I mean, like the top meme coins last cycle were over Doge was over what like $100 billion or
Yeah.
something in FTV. So like we haven't seen anything crazy like that.
Yeah, I definitely
So
believe we're still at the beginning of like, you know, everything.
yeah,
Like
yeah,
this
for sure.
this is
This
gonna
is
get so
these are
much
early
bigger.
days. These are
Yes.
early days. Yeah, I
We're gonna be
really believe so.
reminiscing about this and be like, we are so dumb. Or like at least my
Yeah, like
generation of traders.
you you try to you try to take too many strong opinions too early on in a cycle,
Mm.
and you usually regret your decisions. But that's not to say that no matter what you do, you won't regret your decisions because nobody knows the future, right? Nobody knows.
Yeah, for sure.
Yeah.
I,
Yeah.
I've met
So,
some people that claim that they do.
well, yeah, there are a lot of people who claim to know the future, but I would be very weary of them. Even when they're right about their predictions, I would still be weary of them. Not because they're right or wrong, but because you should be able to make your own decisions. You should be able to collect information uh, online or through your
Mm-hmm.
friends or through your own research
Mm.
and make your own decisions and then accept your responsibility for your own trades as well.
There's
And this is probably a lot harder and it takes more time. But if you can't do this, you're not going to survive in this game.
yeah, it's
It's just
definitely
kind of how
very
things work.
important to manage your trades. Like you have to be there
Yeah.
mentally, like strong,
Yes.
like
Yes,
not
exactly.
break.
Yeah. Which yeah brings up this comment I made a few months ago about I was really like kind of shocked that people never thought about money management in crypto because
Because
in
everyone thinks that you're gonna get
2017,
rich.
yeah, in 2017 when I first started trading crypto, where I just couldn't ignore it anymore because of Bitcoin. Nobody was talking about managing their risk. The only time they talked about managing risk is when they were getting liquidated. Nobody was talking about taking
It's too late.
profits
Yeah.
or like averaging in or averaging out. It was just insane. And I realize now in retrospect, it's because they had never been through a bull bear cycle like that. It was just so euphoric that they really didn't believe that prices would come back down. But of course, they always do. So it's really important to have a mechanical process to determining your risk.
Yeah.
That is like your position size and like having if you have more conviction. So if you have more mechanical factors that align, more confluence in your trade, you could size up a bit. If you have less confluence, then you size down.
Mm.
Um, I think a lot of people they really sell themselves short. They could make a lot more and lose a lot less if they were more proactively managing their position
Yeah.
sizes.
So this is kind of
So
why you say that it's okay to be emotional. Because like
exactly,
if you have
exactly.
yeah, if you
Your
have good
emotions are
fundamentals.
very valuable information.
Yeah.
They give you constant feedback about where you are. Like there's this really famous cliched quote about Soros where he talks about like when his back hurts, he knows that it's a hard position, but it's hard because it's right.
Mm, yeah.
So like if his back hurt, he would double up the position, his size of his position.
Yeah. Yeah.
Like
It,
it
it,
sounds ridiculous,
it,
but there's some value to paying attention to how you feel.
no, it's like I definitely understand. I think I understand that because like, for
Yeah.
example, like in fighting, like if you're emotional, it can be
Right.
like the worst thing in the world or like the best
Yeah.
thing in the world. Because
Exactly.
if you're like
Exactly.
angry and but you like untrained and you kind of wail like a
Yes.
child and just like
Yep.
walk into a right hand and just like
Yeah.
get knocked out. But if you're like
Yeah.
trained and have like good you know you have good fundamentals and you get mad, that's like oh that's not good for the opponent.
No, no, exactly, exactly. So yeah, so pay attention to your emotions. Don't fear
Yes,
them,
pay
and don't
attention,
try to block them
kids.
out.
Eat your vegetables.
Eat your vegetables. Absolutely.
All right, I think we discussed a lot of important things today.
Hmm.
Do you have anything to add?
Um, I just want people to like, keep perspective.
Hmm.
Don't get too frustrated with the slow pace of the market. Don't get scared out of the market too easily. If you see
Yeah.
one down day, it's
Yeah.
more than likely a buying opportunity than a selling opportunity.
Yeah. People are
Um,
rushing a lot. That's like
yeah, yeah, and I think it's
number
partially
one
because
thing.
we're so addicted to new information,
Yeah.
and new information is not necessarily of any more value than old information.
Hmm.
Uh, I really think that people would make much more money if they slowed down in their trading, if they didn't try to trade every single day, unless they're a scalping day trader, which is a strategy, and some people do very well with it. But most people don't. Most people make much more money trading much slower. And I would encourage anyone who's trying to break into trading
Be more
that they
calculated.
take a slower approach, even though it's probably not as much fun, and they won't become famous so easily, but they'll actually make money. And maybe that's something to honestly ask yourself. Do you want to be right, or do you want to make money? If you want to be right, then by all means keep doing what you're doing and chasing the newest data and the newest indicator and the newest influencer on Twitter. But if you want to make money, you have to slow down. You have to accept that you can't be right every single time you buy a coin, and just try to be humble. It's something that took me years, and I'm still struggling with it every day. Never really get over it. You get better at seeing patterns, and the patterns tend to repeat. And those patterns are usually bull bear patterns where people get overly bullish and overly bearish. And I saw an insane amount of bearishness this summer, like I haven't seen since the FTX bankruptcy, really. It's kind of shocking, but Bitcoin is trading close to all-time highs. Yeah, granted, most alts are down really bad and it's disturbing. But if you still have conviction in your plays and you believe the reasons that crypto are going to go higher are still in place, you have to sort of eat dirt for a little while sometimes. And that's what experienced traders were trying to say through the noise on Twitter and in the chats I'm in. But not many people were paying attention. They're paying attention to the really loud influencers
On
who are
Twitter.
making money this summer, which is good. Some people need chaos to make money. Some people need
Hmm.
overly bearish markets to make money. But the vast majority of people that are famous in Twitter are not famous for the right reasons. They're just showmen. They're very good showmen and they're very entertaining. But if you take what they're saying literally, you're gonna get in trouble. So yeah, slow down and don't trust anyone too much, including me. Like I don't know that much more than you, Martin, but I've just been
Well, I'm
doing
not
it
sure
a lot
about
longer.
that.
I've just been doing it a lot
No,
longer. That's why
yeah,
I
I
just
understand what you mean. Yeah, yeah.
yeah.
Well,
Yeah.
thank you so much for this lesson on how to slow
Yeah,
down.
thanks for hosting this. This was
Yeah,
fun.
yeah.
We have to keep doing this on a regular
Oh,
basis.
definitely, definitely.
Yeah,
Okay, I'll see you
cool.
in the next one then.